All right, so welcome back to this channel. And on this video, we are going to be talking about the smart money concept. All right, so most of us, I've come to understand that most people, though they think they're actually using smart money concept, but actually, smart money is not about other blocks or other flow or mitigation block and all of that. All right, they're kind of additional confluences, not really what smart money is all about. There are additional confluences you can use in order to gain higher probability setups in terms of your entry. All right. But what the smart money is all about is structure, inducement, and entry. Just as simple as that. The structure of the market, right, from the higher time frame perspective, right, down to like the middle time frames. Let's say you're using daily time frame as your higher time frame. You can use the 4 hour, the 1 hour to spot inducement zones, right, and the liquidity areas as well. Do you understand? Then when you need to be patient to wait to for that area, that inducement to be taken up, then you look for your entry on lower time frames. It's possible you enter from that same middle time frame with candlestick confirmations, all right, which is something we are going to be treating on. I'm not here to just talk and talk, all right? We're going to practicalize on it and gain deeper insights and understanding about the whole concept of what the real smart way of trading the smart money concept, right? We are not here to trade about order block. We are not here to talk about mitigation block, all of those, this, that, and breaker block and all of that. No, we're actually here to deal with the real concept of what smart money is, the structure, the inducement, and the entry. All right. So this video, I don't want it to make it too long. So what we're going to do is starting from the structure, and I want you to subscribe to this channel so you can turn on your notification bell so you can be able to get more notified by the time I make the subsequent videos that follows this particular one, right? Because watching this one alone will not actually broaden or give you that deeper insight that you need to understand about what the smart money concept is or about what I'm about to review to you. So do what to subscribe to this channel, and without wasting much of our time, let's dive into the process. All right. So like I said, we're going to be talking about the structure of the market. First, market structure is what we're basically going to focus on today. All right. So market structure. Now, under market structure, we have pullback, we have impulse, we have correction, right? We have impulse, we have pullback, we have impulse, we have correction, and we also have break of structure. Now, like I said, we are talking about market structure, how to actually identify a real a correct way of identifying when the market is actually trending, right? So first we're going to be talking about pullback and impulse. All right, below here we have a diagram and some candlestick which I have outlined here for you people, right? In order to know how to spot correct pullback on the chart, irrespective of the time frame, right? How to spot correct pullback. So this whole move here, this is the case of an uptrend actually, right? The same goes to the case of a downtrend, right? But in this example, this is an uptrend um sample that we are going to make here right now. So this whole move here is what we refer to as impulse. Impulsive move actually come with large momentum in the case of an uptrend, right? Because the buyers are much stronger than the sellers, the market will actually give impulsive moves to the upside, creating heavy and large momentum candles, which actually generate pullbacks, yeah, I mean fair value gaps as it's going up. Why? Because the buyers are more in the market than the sellers. So the impulse to the upside will be more greater than to the downside. The downside will just serve as a pullback. Why? Because the market is in an uptrend, and in an uptrend, it actually shows that buyers are the ones in control. So this is what impulse actually means, and pullback as well. All right. So Those fair value gaps and those heavy momentum candles you see going to the upside is what we refer to as pullback and I mean impulse. And those a temporal reversal to the downside before another impulse move is what we refer to as pullback. So this is an impulse, this is a pullback here, right? This is another impulse, this is another pullback, right? And then this is another impulse. All right. So it's very easy to understand from this diagram, but how can we actually spot it on the chart? Because that is where most of you get confused. And that is why I'm here to actually help you to be able to navigate and understand how to spot valid pullback on the chart. All right. So in the case of an uptrend, a pullback is when price or sorry, a pullback is when the subsequent candle. Sorry, I can't actually make writing on this, so you can actually jot it down, right? So you can, have deeper um understanding and also to be able to review the lesson we're about to start here now. So, like I said, what is a pullback? A pullback is, in the case of an uptrend, right, is when the subsequent candle take out the pullback, right? Take out the wick of the previous candle, right? I repeat again. In the case of an uptrend, a pullback is when the subsequent candle take out the previous candle's low, right? Either by wick or by body, which is the candle that has the highest high. Now, let's not focus on theory because practicalizing it will give you more understanding about what you are saying here, right? Now, this is the first candle, right? This candle came before this subsequent candles here. So this candle at some point it was the one that has the the highest high, right? Now before this one came and broke this high, so this candle became the one that has the highest high, right? And this low was taken by this red candle here. Do you understand? So because this low was taken, this green candle, this red candle took out the green candle's low. That shows that a pullback has been made, has occurred at that point. So this is what it means. Price went up to this point, right? And then came back here and then went up again to break this high. So we get another pullback after this high has been broken. So when price break this high, this is the candle that broke the high. If this one were able to take this low out, if this red candle was able to take this low out, then we would have had another pullback here, but it didn't, right? But rather, price went all the way to this high here before this red candle took out the low of this candle. So that is to say, this is where we have another pullback. All right. So the price move all the way after this pullback to this zone, right? And then this is the place where we have another pullback. Why? Because it took out the low of this candle. So this low of this candle being taken out is why we have a pullback here. This one was not able to take out this. If price was able to take out the low of this candle here, they would have said another pullback was made here, right? But because it couldn't, and this green candle came and still broke above this high of this candle here. And this red one came and took out the low of this one that now has the highest high, the highest wick. That is why we now have another pullback here. All right. And then another impulse move generated after this pullback. Do you understand? So this is just the diagram of this market, of this particular trend you are seeing here. So we have two pullbacks here, two pullbacks here. Do you understand? So this is pullback and impulsive move. Example I have just given here. All right. Awesome. So the next on our list, we said we need to understand pullback impulse. I believe from this simple explanation I have just made, you now understand how to actually identify pullback and impulse. It's just very simple, right? When a subsequent candle take out the low of the previous candle that has the highest high. As simple as that, right? Do you understand? It is for any time frame at all. Any time frame at all. All right, so that is that for pullback and impulse. So we have correction and break of structure. We have correction and break of structure. How can we actually spot corrective move and break of structure? A corrective move is a temporal reversal, right? That take out the pullback before another impulse move. What does that mean? Now, this is what the corrective move look like. From this diagram here, this is what the corrective move look like. This is an impulse move. This is an impulse move here. This is a pullback, right? This is another impulse. We have another pullback here. We have another impulse, right? We have another pullback. This is not a corrective move. Why? Because it took out the low. It took out this pullback here, right? So this pullback here, some might refer to it as, change of character or trend change, right? But to be honest, we are dealing with structured liquidity and entry, but we are not actually bringing in the concept of inducement and liquidity yet. So we are here to actually identify how to spot a valid break of structure to the upside. So this reversal here took out this pullback, right? And then went high again, created another pullback and broke this high. So this is where we now have a break of structure to the upside. This is where we have a valid break of structure. Now, price went high again, reverse. This is a corrective move. Why? Because it took out this pullback here. So when price reverse and take out a pullback, then we can say we have a corrective move. We have a correction. And that zone become the strong low of the market. Do you understand? Very simple, right? Impulse, pullback, right? Now, if this was able to take out this here, they would have said this one to be a valid break of structure, right? But because this pullback could not take out this low here, right? Rather, it just came all the way to this point and then reversed to the upside. Then this temporal reversal, which is this correctional move here, was able to take out this pullback here. So we have this taken out, and because this pullback was taken out, then this become our correction. And when price go to the upside again to break the high of the point that made the corrective move, that is when we can say we have a valid break of structure. All right, this is a break, this is a break, right? No doubt. That is a signal to us as well that price is going to the upside. But for us to actually have a good or to have a solid confirmation based on SMC concept, because we need liquidity, right? Then we need price to reverse, take out liquidity to the upside, to break structure to the upside, right? To give us a valid break of structure. Then we can now mark this correctional move as the strong point. This is the point whereby if market should break again, then the trend has changed. Do you understand? Why? Because this point has already taken out a pullback. So this serves as a POI area. So anything that make price to reverse to break this low, the trend has changed. Moving further, break of structure again. This is another pullback. Price reverse, took out this pullback, right? And then reverse again to break structure to the upside. This is a valid break of structure. Why? Because it took out this pullback here. Why? Because it took out this pullback here. All right? Simple and short. Why? Because it took out this pullback here. So this is now a corrective move. All right. So our strong low has now moved from here. You can call it higher low, right? You can call it strong low or higher low, whichever one is okay for you. So it's at this point we will now have to be able to know that when market reverse and break this structure here, then we can say price, the trend has changed, right? The trend has changed. But for as long as this low is still protected, the market can still come and do anything it wants, right? You see it doing anything at all. As far as this low here is still protected. As far as this low here is still protected, it is still an uptrend, right? This is an internal candle. We are going to be talking about that, right? Maybe in the next video, how to spot internal structure and external structure, all right? So this is like an internal structure. So for as long as this low is protected, the only opportunity we are looking for here is buying opportunity, not sales, all right? Do you understand? Awesome. All right, so let's use this candlestick which I have outlined here um to see how we can spot pullback, impulse, correction, and break of structure as well. All right. Now, just take a minute and look at this and see if you can be able to, you know, spot it yourself before I start. All right. So this is an impulse move. We have a pullback here. Why? Because this green candle that has the highest high, the low was taken. So this is a pullback here. We have this to be, let me use this, or let me use this P here. Sorry. So we have a pullback here, right? Then we have another impulse move to the upside. Then we have another pullback here. Why? Because this red candle took out this green candle's low. So this is another pullback here, right? Then price went up again, break structure to the upside. This is a break. This is another break here, right? Then price reverse. This is a correctional move now. Why? Because it took out the pullback. It took out this previous pullback here. So please, this is not a trend change or a change of character. It's just a liquidity grab. All right. So price came, took out this pullback, this previous pullback, and then reversed to the upside, then gave us a valid break of structure. Do you understand? So this is now a break of structure. All right. So at this point, this low became our strong low. Do you understand? So this low became our strong low. Now, after this break of structure, look closely. Do we have any pullback that this temporal reversal made? This reversal here, right? This pullback, did it take out any previous pullback to confirm this to be a correctional move? Now let's watch closely. Price, let's start from the beginning. Price came here, made a pullback, reversed, made another pullback, went up again, made a correctional move, gave us a valid break of structure. Now, before this valid break of structure, did you see that this green candle low, right, took out this red candle's low here by week? So there is a pullback there. So this is like a pullback here. Do you understand? So this is like, so it does not matter the color of the candle, please, right? So for as long as the low of the previous candle was taken by the subsequent candle, that shows that a pullback has occurred. Do you understand? So that is a pullback there, and then price came, made a correctional move by taking out this pullback here. We had a correctional move there. Why? Because this pullback was taken. And then this gave us a strong low, which is our correctional move. So our strong low has now been shifted from there to here. This is now our strong low, right? And we have our break of structure here. We have our break of structure here, all right? So we can only say this trend has been changed by the time price reversed to break this low. Why? Because this is a strong low. It's a correctional low. Do you understand? So that is that about how to spot or how to spot pullback, impulse, correction, and then break of structure. It's very simple. All right. So before we actually, you know, call it a day, there was a trade I took today, right? Today is 16, yeah. So I took a trade yesterday, 15, right? You can see the date from my cursor here from the down. Okay, it was on 14 Tuesday, right? So I caught this trade here. It printed me 5 hour, like 5 hour, pure 5 hour. And I caught another one on the 15th, right? October. It was during London section. This one was actually yesterday trade during New York session, I mean to say, right? I caught this trade and it was today actually printed full take profit. And during my take profit, I saw this move again, right? See the signal I gave here. This was not based on lower time frame confirmation, but based on higher time frame because after this corrective move, price actually gave us a bullish engulfing candlestick. Please, if you have not really watched, you can watch my previous video, the one I made before this, when I was talking about candlesticks, right? Please do well to watch the video and then understand this about candle. Then as you are progressing, you start to gain deeper understanding about what you are actually doing here. All right. So if you have not really watched my previous video, do well to visit my previous videos and then watch them, right? So you can actually go along with us. All right. So this is the trade, and yeah, we are being a good profit for the week. Alrighty. All right. So thank you so much for sticking to this video to the end. I really appreciate your time. And then take care and God bless you all. This is the end of the video. And please do well to subscribe to this channel. Do well to subscribe. Please, this is the only way you can actually support me. Do well to subscribe to this channel and let me see your engagement so that it can actually, inspire me to do more of the videos. All right. So please subscribe, like, and then we're good. All right. So take care.